After the brief introduction that I had, for which I thank you very much, let me just say that I have not chosen for a compliance role by design. It was by accident. And it was caused because of the problems that my former institution, ABN AMRO, got itself into when it was deemed not to be compliant with the appropriate AML regulations around the globe. And we spent a lot of time to try and correct and learn from our mistakes. So not being from compliance gives me one advantage, and it also means that I will slowly narrow the scope of what we'll be talking about today. And that is that we will not necessarily be looking at the regulatory framework. We've had a number of interesting presentations already this morning about that, nor the translation into policy. Having made my mark in banking over 25 years, in the business of banking, our focus will be on the nuts and bolts of AML compliance. This loosely translates to ensuring that what is said in the boardrooms and decided in the boardrooms is actually put into practice on the floor, in the branches, throughout the organization, because that's very often where the mistakes are made. We'll touch on a couple of topics today. Firstly, we all know that the laws require us to be AML compliant. And we also know from experience, I can tell you, that it's also quite a nuisance. So not necessarily the most interesting topic to be discussing at your boardroom. However, there is also a business rationale for you to be AML compliant, and we'll touch briefly on that. We'll also, in the context of seeing some experiences of other banks, how they've made mistakes, we'll be looking at why it appears to be so difficult for these organizations to be compliant with the regulations. Then from there, it's a natural step to look at what concrete operational measures you need to take as an organization to make sure that your organization does what it should. What is needed to give an organization a fighting chance to remain in the supervisor's good book? And we'll touch on three main topics there. Finally, we'll look at the critical success factors, whereas the topic before that will be quite tangible. The critical success factors, as you will see, will be quite a lot intangible. We'll talk about the culture and the intensity and the intent of management in maintaining business integrity. And at the concluding remarks, I will share with you a couple of steps you may wish to take after today's very interesting seminar. Banking is all about trust. It's about trust towards the depositors as a guardian of savings, towards borrowers as a reliable partner, towards banks, correspondent banks, towards shareholders and employees, towards society at large in terms of corporate social responsibility, and towards regulators and supervisors. Being implicated in facilitating money laundering will seriously jeopardize the institution's reputation, which in turn can lead to significant financial cost. And more on that later. Hands-on, I can tell you from my own experience that if your company, if your bank is caught and has paid a penalty and needs to reform, it is a huge internal distraction. It provides loss of direction, loss of confidence for staff, loss of focus, and your clients will suffer for it. Please don't underestimate the pain that these institutions will go through once they have been caught on the wrong side of the law. And finally, what happens is, aside from the financial penalties, you may even jeopardize your license to operate. we've seen a number of institutions who have stopped operations because they haven't been able to maintain regulatory compliance. Let's have a quick look at what's been going on in the market. We've seen over the course of a number of years how major institutions worldwide have received significant penalties. These are huge sums of money that are paid out just because of the regulators' desire to demonstrate their determination to maintain the business integrity. I can also tell you from experience that the numbers that you see on this sheet are probably about half of the actual cost, because these only represent the penalties. The cost for redressing the problems in your organization is at least double the number that you see here. So it is a huge amount of money. And it's not stopping. Regulators in certain countries are also going after individual bankers, holding them liable and prosecuting them for not managing their organizations appropriately. What I think is quite stunning on these slides is that you will recognize quite a few names. These names are well known. These are not banks where we've all been suspecting that there have been problems in the past. These are well-known names, highly respected, long history, good management, good policies, and still they get caught. Now, why is that? We'll talk a little bit about the underlying causes in a second. But I can also tell you that it's not over, because just recently, and I picked up a few headlines just of late, of organizations that are currently being investigated. And we can expect that the list of penalties of organizations that are penalized is going to increase. And again, these are names that we will all recognize as being good banks. You may say here in Kenya that these are all global institutions. They operate in many countries, much larger than what we have here. That doesn't affect us. It's not an issue that we need to concern ourselves with. These are all the big international banks. They are in the limelight. Well, let me assure you that that is not the case. You will also notice the effects of these institutions being penalized for these large sums of money. How? These organizations will, because they have experienced all of this pain, will be looking very carefully at their correspondent relationships. They will want to come to your organizations. They will want to look in your kitchen, see your AML program. How robust is it? What have you done? What can you demonstrate that you have done to make sure that your organization is going to support them and they don't get caught because their relationship is perhaps not as sound as what they would expect, because they will then again be receiving a visit from the regulator. The other side of the coin is, of course, that this could also be a competitive advantage. The first movers, those banks here in Kenya, who will look at their organization, clearly establish good policies, monitor them, do a lot of training of the staff, will have a competitive advantage, because those are the banks that these large institutions will be looking for to partner with their business in Kenya. Just one more slide on these painful issues that you will run into. I mentioned to you that the cost is very high for these institutions. Very, very plainly, the market also perceives it that way. Standard Chartered, a bank I think we all respect as being a very highly regarded bank, has a strong emerging markets franchise. Its share price plummeted 23.5%, $16 billion of the value of the company was lost in one day because the state banking regulator, the New York regulator, had threatened to withdraw its dollar license, which means that Standard Chartered would be seriously jeopardized in being able to serve its emerging market customers. Overall, since the beginning of when Standard Chartered was first mentioned in the press, the share price had tumbled by about 30%. So the markets are also taking this very, very seriously. How is it possible that these organizations, these large organizations, well-regarded organizations, end up with such a problem? Why is it that they just don't seem to get the message? Because you'll see that many of these institutions will be repeating the mistakes of other institutions. I can speak from my own experience that ING, another Dutch bank, was fined over $600 million for exactly the same transgressions that my own institution, ABN AMRO Bank, had been fined 4 years earlier. So there's something that's blocking the learning capability for these organizations. So we'll have a look at that. And again, this is based on our own experience of having spoken to our clients, the other banks, what we have discovered. Firstly, and I think you'll all recognize this, that AML and CFT is not an easy issue. These are integrity-related issues, and there's a lot of gray, there's very little black, there's very little white. So it is very, very complicated as an issue to address, both on the regulatory side, because there's a proliferation of regulations. It's not only AML, it's anti-bribery and corruption, it's MiFID, it's FATCA, it's Foreign Corrupt Practices Act, and it's going to continue. More and more is coming. It's better to prepare your organization for this. The issue is also becoming more complex because a lot of these issues have extraterritorial implications. So legislation enacted in country A will lead to obligations in country B. And that may not sound fair, but that is the reality. It's something we need to live with. In terms of the organizational complexity, I think that is due primarily because of the growth of the industry. Technological innovation, product specialization have allowed larger institutions to grow. And those have become increasingly difficult to manage. So it's very, very difficult to take a holistic view of your risks in an organization. It's also fair to say that there have been other priorities for a lot of these institutions as well. We can only look at the current financial crisis in a lot of the Western countries. Looking at Europe, it's the Eurozone crisis, which has bumped AML down the list on the agenda of managing boards. And this has also been confirmed by a survey that was done by KPMG just last year. So there are more pressing priorities. It's difficult to maintain that because this is also not something that you make one decision on day one and expect it to be implemented on day two. It's a continuous effort. It's also fair to say that for all of the banks, they'll face the competitive pressures. Not everyone is playing by the same rules. We all know it. We share that. And why should I be more compliant or I have more strict rules for my people, my staff, than my neighbor who's not so choosy? There are inherent conflicts of interest. If for the front office staff, your relationship managers have targets to meet. At the same time, we usually rely on the relationship managers, our first line of defense, to maintain the business integrity and to identify and spot suspicious situations. That's really not fair unless we give them the tools and the organizational support that they can do their job properly. Generally speaking, and this is across the globe, it's no different in Europe, it's no different in the US. Generally speaking, there's a lack of AML knowledge and awareness. And awareness, we'll talk about a little bit later on, is extremely important. It goes further than just knowing about the rules. It's about being able to understand them, internalize them, and use them to recognize suspicious situations. Across the board, lack of AML. So we need to focus on that as well. I think one thing that's being ignored a lot and especially with the extraterritorial implications that I mentioned a little bit earlier, is that there's generally a lack of knowledge, ignorance, lack of appreciation of cultural differences. It may work perfectly well in a Northern European country for a junior staff member in the branch to ask an elderly customer visiting to provide information about their business, about the ownership, about identification or identity cards. It may not be so easy in other countries. And interpretation of what is respect is also very, very important in this respect. So there's generally very little appreciation for all of these cultural differences across organizations, but also across countries. It all leads to what we have identified as being the single most serious problem. If you look at all of these large organizations, I don't think you will find one organization where there is no AML policy that meets all of the regulations, all of the requirements of the regulations. You'll also find that all of these organizations have compliance departments staffed with very, very competent people. Then how is it that there's still all of these things go wrong in the business itself? How is it possible? Well, the reason is that there's a disconnect between what's being said and what's being mentioned in and decided on in the boardroom and what happens on the floor where the people are working. And unless we try to bridge the divide there, we're always going to be entertaining these problems. So we'll talk a little bit about that as well. So these are some of the problems that you will recognize perhaps, but it always comes back for all of these organizations. So again, looking at it from an operational perspective, how do you ensure that your organization remains compliant and actually does what your chairman of the board, your CEO, has mentioned in his speeches to shareholders, to clients, to the employees, how important this topic is. So let's look firstly at, we have to move within the framework, the local or the regional or your global regulatory framework, your legal framework that you have, that determines what your room for maneuver is. Within that framework, you need to, as an organization, you need to develop your own corporate vision. How do you want to position your organization in terms of AML risk appetite? How much risk are you prepared to take? What is your ambition? What do you want to achieve? And then from there, design your policy that you will then introduce to your staff members, to your employees, and also towards your clients, so that they're also aware. Then once you have that in place, so you know what you want to do, your vision is clear, your policy reflects what your appetite says, then you have 3 pillars that we've identified that'll help you on an operational perspective to ensure that integrity of your organization. We have the corporate governance and the procedural controls on the left-hand side. And on the right-hand side, your information, your tooling, your system support. Those 2 topics I will not be discussing in the interest of time too broadly today, but in your information pack, you'll have a couple of slides on that. I'd be happy to field some questions if you have those. I believe there's an opportunity for a question and answer session afterwards. But I will talk to you a little bit more about what I personally consider arguably the most important part, which is your AML education, training, your learning strategy. How will you ensure that your staff understands what's expected of them? But firstly, I'll take a step back. Some surveys have been done, and the training is there. I'm sure it's there already in Kenya. There's a lot of training that's being done, but generally speaking, most banks are quite unhappy or not satisfied with the quality of that training. Surveys have been done. KPMG did one in 2007. There's a lot of money being spent on training. It's not very effective. Therefore, it would make sense for us to investigate why that is. So, they are complex. AML issues are complex. As we mentioned earlier on, there is a lot of gray area. It's about business integrity, so that your own values are also included in what you perceive and what you see and what you will report. And it's very often role specific. It doesn't make a lot of sense to train a wholesale banker, a commercial banker looking after corporate customers about AML prevention in a retail environment, because that's not something that will resonate with that person, or vice versa. So it's very important to make sure that it is very close to the perception and the dealings that the individuals have every single day. It's also clear that most of the learning that's being done right now is motivated by just passing on knowledge. Here are the rules, let me give it to you. You can now read it, and therefore you should know what to do. Well, it doesn't work that way. So a lot of the current learning, because we have large populations, the banks naturally will look for efficient ways to train their staff. A lot of e-learning that's going on at the moment, but that is very much driven by just transferring knowledge, providing information to staff without actually knowing whether or not they have internalized this knowledge and are able to apply it in their work. So it's too static. It's also about yesterday's issues and not looking forward, but what we can expect to happen. And frankly, a lot of the organizations around the globe that do the training because it's obligatory. Extremely happy when I heard about this conference and that it was about creating and enhancing the awareness of AML within the financial sector here in Kenya, was that awareness indeed is key. With all of this focus on AML knowledge, there's not enough about awareness. And how do you define awareness? It is a deeper sense of knowledge, truly understanding an issue. And in the context of AML, for example, being able to recognize a suspicious transaction, a suspicious situation, and then knowing what to do with it. Or taking it slightly away from the context of AML, knowing the difference between knowledge and awareness, truly understanding it, feeling it, behaving it. Let me give you an example. First, I have a question for the group. Could I have a show of hands? Who knows how to ride a bicycle? I think almost everybody, which makes me as a Dutchman feel very much at home, by the way. It's a lot better. Now, let me ask you a second question. Who has, those of you who know how to ride a bicycle, who learned how to ride a bicycle by reading this book? How to ride a bicycle. 3 easy lessons. I think we all recognize that you do not learn how to ride a bicycle by reading a book. You learn how to ride a bicycle by getting on the bicycle and experiencing this thing with gravity and moving forward, and then suddenly you get it. You understand it. So you're actively involved in it. You appreciate it. You feel it, you understand it, and that's why you get on the bicycle with confidence. That is the kind of awareness that we're talking about, that we must create with our staff members if we can really rely on them as our first line of defense, and which we should. Cyprus? Once, when I mentioned to you that I was working with ABN AMRO, we had some issues to be resolved with the US regulator and also with the Dutch regulator. So there were quite a few visits to New York to explain and what we'd done and how we'd start to amend our organization and what we were doing differently. And during one of these sessions, we were explaining latest course of action, we'd gone to point 6 or point 7, and we were interrupted by an officer of the Federal Reserve who stood up and said, listen, you may know about AML, but do you really get it? Do you really get it, what it means? And it's getting it. That is what awareness is about. It's not just about knowing what the rules are and being able to repeat them and even answering all of the questions in the multiple choice. 10 out of 10, well done, congratulations. It's about, do you internalize? Do you understand what it means for you? How you will apply it in your job? So, that's not the way to do it. We have to look at a different way of training. It's not just about transferring knowledge. Mind you, you have to transfer the knowledge, because otherwise you're not able to internalize it. But the way to move forward is how to apply it in your work. So with this knowledge, what does an effective AML learning or training program look like? Firstly, very, very important. It's actually something which is not directly related to the training, but it's where you come in. So I understand there are quite a few senior executives of banks present here today. So that there has to be tangible senior management support for the program. Ongoing. Ongoing. And tangible means that it's actively sponsoring the AML program. It's not just about the knowledge, it's about creating that awareness. That's the issue that we're looking at. And in your training, make sure that you target the risks, the AML risks that you can identify as being the highest. So that way you take care of your biggest problems first. It may surprise you, but it's actually quite good and quite possible to measure the level of AML awareness of your staff. There are programs available that'll do that for your institution. I would warmly welcome you to investigate this. So once you have identified, you've measured the level of awareness of your AML awareness of your staff, then from that you can create a heat map. You can identify in which areas your staff is still lacking that awareness, lacking knowledge, and actually needs additional support. You can also identify where you perceive that your biggest risks are that mistakes will be made and where you might run into problems. And then you can prioritize your training budget to address those risks. So measuring awareness and then tackling your priority risks is very important. It's also important that when you design your learning program, that you align the objectives with your business objectives. Your risk assessment, so how do you perceive your risks and the audience that you're trying to train. Very often we focus on the front office staff, the relationship managers, the banking clerks, but we forget about a very important group. And I'd like to state a strong case for looking carefully at your middle management. Why is the middle management important? We call them your AML risk sentinels. They are closest to your front office staff to be able to provide them support and guidance. They're also able to pick up emerging trends. And they have good access, easier access to senior management to be able to filter through what emerging trends are coming through. And at the same time also to be able to eloquently convey senior management's concerns and seriousness about AML towards the front office staff. But your middle management needs some tools. And I think it's appropriate to focus especially to these key people in your organization that will help you reconnect between senior management and the field. Regulators are becoming also quite clear. They're becoming very clever that they realize that the effectiveness of the training is not so good. They are increasingly asking organizations to measure the results of their training efforts. So So it's better to start soon and demonstrate that you can actually increase the awareness and the knowledge of AML in your organization over time and become a learning organization, so that when the regulator comes along, you can demonstrate the improvements that you have made in your organization. So, we talked about the pillars, focusing in particular on the learning side. I mentioned that those are the tangible sides of the business. The more intangible are the critical success factors. They're top-down and they're bottom-up. So let's have a look at the top-down. Firstly, it is extremely important, and you saw that already with the training side, that there is a very strong and sustained AML leadership at the top of the organization. Top of the organization needs to be there, actively sponsor, and walk the talk and help the staff understand how important this is. You need to articulate your risk appetite, your AML risk appetite. What are we prepared to accept as a risk? This is a business. We are in the risk-taking business. How much are you prepared to accept? And what do you do if you run into something where you're not clear whether it's acceptable or not? And once you've established what your risk appetite is, it's very, very important for consistency that you stick to it. Make sure that everybody continues to understand why and where the buck stops. Inevitably, there will be mistakes. Inevitably. It happens in any organization. It's important as senior management that you recognize it and you address policy violations swiftly, consistently, and transparently. But this also means irrespective of rank, and that is sometimes very, very difficult. But it's critical to demonstrate how seriously you're taking this issue, that you will address, and that you make it clear to your staff what's acceptable and what's not. Promoting AML in the HR strategy. In the long run, and this is not something that's going to, creating awareness with your staff is not something that's going to come easily. It has to be sustained for a longer period of time. Your HR strategy can help as well. Embed that KYC awareness. Reward ethical behavior. Punish unethical behavior. Deal ruthlessly with unethical behavior. And show what kind of organization you want to be. Embedding it in the DNA helps if you use your HR instruments. Personally, I've seen a lot of banks who have put AML targets or compliance targets in their annual objectives. Personally, I am not in favor of that. I think that's taking it too far. It's inappropriate use of the objectives because it implies that one objective may have priority over another. Compliance is a conditioned precedent for being employed. It's not something that you can arbitrage against a commercial target or something else. So the bottom up, we all know, I think this is quite clear, that the first line of defense is your client-facing staff. They are key, and they should be trained to know who their clients are and will have to take responsibility for all of the client's activities. We see in many organizations that client ownership, accountability for the client's activities in an organization is scattered, whether it's with the dealing room for some treasury products, or whether you have some structured or some trade department looking after a client. It's very important that you establish that there is one individual who is accountable for all of the activities that that client does within your organization. So that if there is something that goes wrong, you are able to point to that one person and say, what happened here? If you don't, it's inevitable that mistakes will be made. The staff also need support, need your support to be able to understand what the policy is, what you intend to your organizations to stand for in the terms of AML compliance. and they need to act in its spirit, because they will constantly need to interpret day-to-day situations. Recognizing, training to recognize suspicious signals, and then know what to do once they do. Last but not least, of a critical success factor, document. Document, document. And if I haven't mentioned it already, document. It's extremely important for you to document what you do. Ensure that your policy, your training, your know your client activities and information are documented and retrievable. Regulators and supervisors know that, and only will not easily second guess you for a risk assessment if it is properly documented and reasonable at the time of making the decision. So when you are asked to make an assessment of whether or not you want to engage with a certain client, make sure that you document the process that you have gone through so that you can use it to justify making a decision if in future something goes wrong. So we've reached the end of the presentation, but I'd like to share with you a few next steps that you may wish to consider going forward after today, what you might want to do. Firstly, I'd like to encourage you to have a close look at your markets, where you operate. What are the AML dynamics of your markets? What's happening in the market? What's changing? What's moving? What new technologies are emerging? What are you seeing happening, and especially in a region as in East Africa? There are lots of things that are happening right now that are going to affect the way that you run your AML organization. Benefit. Study industry best practices. Benefit from others' experiences. It helps. You may wish to conduct an AML risk scan of your organization. You can involve your own compliance heads, you can involve audit, review what your organization looks like. Are your critical pieces in place? Run a risk assessment, an awareness assessment, scan of your staff. What do people understand? We may think that it's obvious that this or that is good or wrong, but does your staff also appreciate it in a similar way? There are programs out there that can help you determine what levels of awareness exist in your organization. Review your controls. Are they in place? How is your governance? How are people expected to report? And is there a whistleblower policy in place? What is your risk appetite? Is the policy still aligned with the changes in regulations? Are your systems still fully supporting your organization? And last but not least, key to all this is to look at your training program for your staff. Make sure that it's not only about providing information to your staff, but that you are in a position to support them in building awareness of AML issues. Thank you very much.